Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are after market close on Friday, October 1st. We're going to take our daily look at SoFi. SoFi had a fantastic day today to cap off the week, up over 3.5% and some pretty solid volume. We'll take a look at that when we take a look at the daily, but I wanted to first look at the intraday. And then I do want to address last night's video because I think there was some confusion there. So let's do the intraday, last night's video, daily, and then quick look at the data, and then we'll call it a week. So intraday. So we did see a bit of this slingshot effect, but what we didn't see, which is a good sign for the bulls, is a continuation downward after a nice uptrend to start the trading day. What we did see that's beginning to become a pretty clear pattern for intraday trading of SoFi, which all like patterns in general, I feel like unfortunately, I have to say this, because whenever you point out a pattern, everyone expects, not everyone, some people expect it to work 100% of the time, which is insanity. You have to realize if there's a channel, if there's a pattern, if there's a crossover of some sort, that will give you potentially better trading odds based on that sort of setup. Everything is a setup, and a setup gives you some sort of predictive lens through which to look at future price activity. Same thing with supply and demand zones. It doesn't have to reject or bounce off of a supply or demand zone, but oftentimes it does. Oftentimes it's not 100% of the time. So just keep that in mind, because I see people talking about things that fail. And yes, everything fails at some point. What patterns and sort of predictive models and indicators and things like that try to do is give you a better than flip of the coin opportunity to take advantage of a price movement based on the setup that you're seeing. And sometimes that can go against you, but if it goes against you 25 or 30% of the time, you still have a better than chance opportunity to take advantage of that setup the 70 to 75% of the time that it does go the way that your indicator is predicting, or your pattern, or whatever it may be. So let me start there. But we've seen this several times. So anytime it's pulling back or it's establishing throughout the entire day, like we saw yesterday, or a big bulk of the day, at or around, or not really choosing a direction over the VWAP, right? This was yesterday. We see it make a clear run over the VWAP and test and then run. The day before it, we did not see that, okay? So here's an instance where it's not the case. The day before it didn't even get really any chance over the VWAP at all. The day before that, we see a run up over the VWAP, a test and a bounce, and then a nice run up continuously. The day before that, we see a nice run up, a pullback, and a bounce off the VWAP, and it continued. So this is just to say that we've seen this pattern a few times where if it's able to establish up, over, and then bounce off. Here it just sort of like got consumed by the VWAP all day, right? Battling choppiness over and over and over, up and over and up and over. Here we saw a good one, right? Established up and over, tested and bounced, right? So hopefully folks can see the difference between something like this and something like this, right? Chop, 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 chop. Much, much different pattern. But this is just to say that today we once again saw this type of pattern play out where we had run up, lose the VWAP, but stay very, very close. It's always an interesting indication to me when I see the price action stay very close to the VWAP throughout the day or throughout a period of time, and then make clear moves toward it. And then here we saw it establish over. It rejected off of that supply and demand zone that we have charted many, many moons back. 1629 bounced right off of it and then bounced right off the VWAP and then just struggled with that 1629, was able to establish overits and bounce off to close out the day really strong. So this is why VWAP, supply and demand zones, these are very, very important factors to consider in setups or day trading or what have you. So really, really good movements on the daily or the intraday, not the daily, the intraday on SoFi today. So just a really solid day. Now, before we flip to the daily, I'll do it, but then I'll talk. So I'm gleaning from some of the comments and some of the messages that I received after last night's video. I think some folks were kind of confused. And maybe it was because of the title. I don't know. But is the offering actually bearish? Now, I think some folks are reading that as, is it actually bearish? Emphasis on the bearish. That's not how I meant it. And this is part of the problem with the written titles. How I meant that title was, is the offering actually bearish? And the reason that I asked that was because we saw these days leading up to that video, we saw these days of pretty solid bearish activity, right? Down 6% and then down less than 1%. But after a down 6% day, down 3.73 the day before that. So the question was like, hey, there's all this bearish movement in the stock. Is it really bearish? And I think some folks took that as me saying like, this is actually a bearish thing. I don't think that them raising money in this way is bearish. I have concerns about sort of the execution of certain things because I have concerns about how a company is able to execute in general. I think that it says a lot about a company, how they deal with things big and small, and that it can give you some sort of indication of how it is that they're going to perform in the overall picture. And this, to give some backstory, I know I've said this before, but in case you haven't heard it, I have been part of a company from a very, very early stage that then grew over the course of, I think it was 8 or 9 years, from a startup. And I was with them in their very first year integrating with the public up through IPO. And I know how messy it can be. There are landmines everywhere. This was also in a heavily regulated industry, much like fintech. It wasn't fintech, but this was in a separate, very, very heavily regulated industry. There are landmines everywhere. There are ample opportunities to make mistakes. So when I see things that feel like they could be unforced errors coming from potentially investor relations, where they could come out and clarify some things, and I don't see any reason why they couldn't come out and say why they upped the offering amount. I then start to just be curious about their ability to execute on sort of fundamental things. And just because you put a really great team together that on paper looks phenomenal doesn't mean anything. There are companies all of the time that fail, even though they have on paper really phenomenal teams. And I've seen it before, and I've been a part of a company that looked phenomenal on paper, several companies that have looked phenomenal on paper, and some fail and some don't. And it's for a myriad reasons. Everything is not as binary as folks like to ask. Are you bullish or bearish? Neither. Are you super into SoFi as a company, as a stock, or are you not? Neither. I've talked about this before. I think I talked about it in last night's video, actually. I've been into SoFi when it was IPOE, not because I was super interested in Chamath's SPAC, right, with IPOE, and not because I even knew what SoFi was as a company at that point. I thought that the stock, as a thing unto itself, was in an interesting predicament at that time with IPOE. And then it transitioned into SoFi, and SoFi also picked up a lot of those same predicaments and is in a very, very challenging situation. And I think it's interesting. And over time, I've come to hope that they can execute on their vision. But I have concerns. And it would be, I think, naive to not have concerns, because even if the company is going to be wildly successful, there's going to be a lot of challenges along the way. Any company at this stage, whether they're going to fail or whether they're going to boom, is going to have really challenging times and do potentially less than ideal things, just because it's hard. It's very, very hard. And I know that. I know that from firsthand, blood, sweat, and tears. And so I just want to relay that, because folks get very caught up in this. Are you bullish or bearish? You sound bearish. It does not matter. I'm not bullish or bearish. I don't care. Is the bottom line. I'm interested in the predicament of stocks in the stock market, of companies that are trying to do really big things. I'm interested in that. Would I like to see them succeed? Yes. Do I have some skin in the game? Yes. Am I wildly over leveraged with, a huge percentage of my portfolio in any stock, including SoFi? No. I just don't think that's a bright place to be. So if anyone was confused about any of those things, I just wanted to clarify, because I know there's a lot of folks that come and go, and I don't know what anyone has heard at any given point in time. But to the degree to which that helps clarify anything, there it is. And I'll leave it at that. But let's move on to the daily. So on the daily, now I don't know why some folks had also dropped a note that on their platform it was showing that this gap had filled, and I don't know why it was clearly showing something different after market close yesterday on Webull's desktop app. I don't know, but now we do see this wick coming down through the gap. Now, sort of experientially speaking, I have seen a lot of times wicks kind of not suffice, just because the volume can be very thin, even though it's during trading hours, during like regular trading hours, that the volume can be very thin on the wicks and therefore is not quite enough to fulfill the filling of the gap as it pertains to the volume and the price action that the stock wants to see. But the degree to which this wick does fulfill filling the gap, I'm happy to move on for sure. And so if this was the case, this would actually be a really, really bullish sign in my opinion, because we're overall well above this uptrend that we talked about in last night's video. We're now retesting to take support over 1629, which then gives us a path to 1687, and then gets us very, very close to sort of retesting this uptrend that we had talked about several days ago, maybe last week, and could just sort of be another stair step in this direction of, okay, we're moving into a period of time when we're going to enter an overall bullish direction up, but there's going to be some slight pullbacks and some slight periods of consolidation or what have you as we get there. But this hasn't really been consolidating unless you consider like this whole area from like 18 down to 13 and a half a range, which like I wouldn't at this point. Maybe when it gets to, much, much higher priced, you would look at that and be like, that was in a range. But at this point, this is such a variance of percentage gain and loss that I think that it's silly to say that this is a range. This to me is more of a stair-stepping pattern, and it hasn't really spent much of any time consolidating is my point. It spent very little time sort of moving sideways. It's done this very, very consistent up and down and up and down. So while it has sort of traded in this range for quite some time, even like this early on in the game, there has been some really consistent fluctuation within that range throughout this period of time. So to me, that's why I think that this is an additionally bullish move today, not just because it's green, but if that little wick volume suffices for filling that gap and we're able to move on, I mean, there was nothing that was seemingly interrupting this really, really strong movement up, except for the macro forces that we saw on this day. And then we got then slammed by the offering, or the reaction to the offering that we saw the following day. And this is, again, not that I think that that offering was bearish. I actually didn't. I thought that I had made that clear, but that the market clearly reacted to it bearishly, right? How else would you sort of digest over 6% down day, other than to say like, oh, the market didn't like that. So, so if we're able to sort of move on from that and sort of resume what we were seeing here, that would be really, really interesting to me. So I think that the first half of next week is going to be really important. I think it's going to tell us a lot about where SoFi wants to lean in the coming weeks and maybe months, or at least heading into the Q3 earnings that are coming out in November. And if they are just sort of like putting all of the pieces in place regarding the bank charter to be able to announce that just ahead of or at Q3 earnings, that wouldn't shock me at all. So I think we're in a really good spot here on the chart, and it'll be interesting to see, what evolves over the next few days, which are next week. But I think that that will be a really strong indication of where we go into earnings. Quick look at the data to finish off the week. Utilization under a quarter. Short interest did come up a little bit today, so we are over 10% at this point. So I think with this jump up today, shorts who have been coming in a little bit during this drawdown took it as an additional opportunity to say this could be a temporary, as they like to say in the world of tropes, dead cat bounce. Not to say that that's not a real thing, but this could be the play that shorts are maybe counting on, that this was a bit of a dead cat bounce, and that the bullish momentum isn't really ready to resume like we were seeing it here. And the big thing there could be the volume. Now, it was a Friday, so 18.6 million in volume today. Now, I know that it looks minuscule compared to the sell volume the last couple of days, but if we look at where 18.6 gets us, if we just line it up on the cursor down here, this is pretty in line with a bunch of green days, and a bunch of green days that actually had kicked off this uptrend that is held through present day. So if we look at, the volume that kicked off this trend here, that has now expanded into the overall trend here, these were days of 13, 17 and a half, 13 and a half, 13.7. And so to me, this, if it's going to sort of like start to flip the script and move back in a bullish fashion, this seemingly down volume day today doesn't necessarily scream to me, oh, this is just a dead cat bounce. It's going to require more to be able to ensure that we're sort of steering the ship around, turning the ship around, steering in a different direction. But all of the elements are there, in my opinion. As long as the intent of filling this gap was then sufficed by the wick. To me, that's what a lot of this sort of leverages on at this point. 1629 will certainly be telling if we are able to move towards 1687 early next week, or if we come down and test it. If we lose it and flip it to resistance, obviously, then we're going to have to watch closely and see what happens. But that's where I stand with things at the moment. All right, folks. I hope you've had a good trading week, and I hope that you enjoy the weekend ahead, and I appreciate you watching. I will see you in the next video.